Hello traders and welcome back to mentfx. In this episode today, I want to take a look at a few trades we took this week, kind of break down why we took them, how we took them. Of course, we're going to look a little bit more in depth at this on Sunday during the mentorship webinar call. Again, for any of you that are interested in it, it is no longer a Telegram group. It is available right here at launchpass.com/mentfx/mentfx. So if you want to be a part of the mentorship, a part of the community, a part of the group, which basically entails everything you see right here with the course content, some of it which is private, all these areas where you can talk, the funded members channel where people catch things day in, day out, and send out their own trades, since we have actually some very good traders in this community as it is. As you guys know, I just made a video on a trade one of our own members sent out. And of course, access to me and access to some of my trades. So today we did a ton of trades on Euro USD. I think we took a loss on one or two, but we hit an 18 RR relatively easily, and we'll go over that. You can see me basically partialing and talking through the trade here, but let's go up to where we got involved in GU a few days ago, and let's take a look at how we got involved in it. So what was interesting is we actually were able to catch a 5-second sell. So it was actually based on a 5-second chart on GU, and actually a few members in our community got in. And again, I'll show you the prior and then the actual entries. And actually, I'll show you the loss as well, just so you guys understand. Oh, actually, we did not take a loss on this one. I was only on Euro USD. And just to show you guys how it is that we went about taking this trade. So let's take a look at, so the trade was here. I'm playing price back a little bit so you guys can get a little bit of an experience as to how we did this. Again, we're going to break this down a little bit more, but for this episode, I just want to kind of break down what we do, how we do it, and then how you guys can aim to do the same thing. So let's full screen this so you guys can see it. Let's get rid of this right here so you guys can see much more of my screen. Again, the candles are not that easy to see right now, but what we'll do is we'll actually get rid of all these two. These were all things we caught on GU after the fact, but we don't need to look at that right now. Let's go ahead and take a look at the daily and just run through price the way we normally would run through it. So let's zoom in here, right? From the first point of view, basically for the last few weeks, as you know, from the videos we've released, from videos other smart money traders might have released, we've been pretty much bullish on XXX USD pairs, especially with the easy to see bullish daily trends. So of course we were looking for bullish runs potentially. Now we were able to catch a great bullish runs from these areas here, which were basically 4-hour order blocks. As you can see, had this 4-hour order block. This is what we spoke about. If you guys remember, the video prior was, I believe, on GJ of what someone in our community caught. And ultimately, we had this crazy run, which did finally make its way above previous highs, aka taking out all the liquidity that lay above these highs before coming back down. Now, when this price came back down, we were interested in looking for price to come to a few areas. And as you guys remember from last video, this was the area we were expecting it to actually come to. And lo and behold, that's exactly what happened, right? You could have been a participant already here at the 50%. As you can see, you didn't have to refine this that much. You could have been involved here. We, of course, did the refinement. Some people didn't. Some people just took it normal. It's all going to come down to preference in the end, right? Stop loss just below the low, profit just above the highs. And then, as you all know, I do believe this came and took out these new highs, because since we're in a bullish run currently, that means that we are aiming for the liquidity that rests above every single intermediary term high. So every time we create a high, what's happening? Kind of the same thing we spoke about in the Bitcoin video, where people are trying to anticipate highs, right? Trying to predict that the final high has finally been made. The final high has finally been made, right? And shorting the market. When something like this occurs, you have a ton of people, not just retail traders. Like when we say retail again, because of all the confusion that's been going, we're talking about people that are emotional and trying to get involved very quickly in the market without kind of taking a step back and thinking about what they're doing. So this is occurring, and you have a ton of people starting to sell this, retail traders on behalf of, just normal traders, as well as smaller banks, hedge funds, and things of that nature. They're trying to sell these areas, seeing this as a potential, top that might hold. You get the move down. Again, people are getting involved in this. Keep in mind, this is a 4-hour. Continue to think about the price in a fractal nature, because what does this price action look like on the lower time frames? Most likely a little something like this, right? And when you start seeing this, and then maybe this low move up, right? That's right here. People start to see, the flag pattern, looking for potential breakouts and all the fun stuff just like that, right? And then they get liquidated before the real down move happens, at which point they get involved in more sells, because they are basically, again, being emotionally taken into the market and trying to get in and trying to catch the trade. And what happens is they most likely get liquidated as we come to mitigate previous areas of supply and demand, right? aka order blocks. You can call them a variety of things before the real run occurs. Okay, so at this point, we are still expecting, since this is the trade that we had technically gotten into, or at least a lot of people have, expecting prices to most likely come here, right? So of course, as price took off and started to structurally go higher on the lower timeframes inside of there, this was taking the break even, or maybe even began to be trailed as per every low that formed, because on lower timeframes we have real lows that are being formed in the market, and we're expecting those to hold until these highs are taken out, because what's above these highs, as we've spoken about before, stop losses and buy stops. So that's what we are looking to run until the bias changes, just like Bitcoin, just like that video on Bitcoin, just like any other currency pair. If there's a bias, keep to that bias until that bias is changed, because when stuff like this occurs, people are preemptively expecting lower prices, and then they get liquidated. Then they finally start expecting lower prices and they get liquidated, right? And it continues until there's not enough sellers in the market, in which case then we finally become a selling market where everyone starts to finally buy, because eventually all retail is going to be incentivized to start buying. Either way, sorry for getting into that a little bit too deep, but hopefully that increase your knowledge on that a little bit. So we're in this buy, expecting price to come here. Now, from the old videos, from the core of what we basically begun teaching in and on mentfx, is the idea that price to go higher needs to go lower, right? So for the composite man to take price from this point to this price point, he can't just do this, right? Because when he does, it's too easy to see that move, and anybody can be a participant of that move here, right? So instead, what the composite man will usually do is sell before the real buy, right? The idea of filling some lower inefficiency before going higher. The idea of to go higher, going lower first, right? That's the whole idea of order blocks and everything of that nature ultimately. So you have this sell to buy, ultimately coming to fill some inefficiency right here before the continuous up move right here, okay? So basically, you have that sell to buy, and just like we've spoken about in the past, price will always move from inefficiency to inefficiency, right? Even if it is in a structural up move, the moves in between, the intermediary structure points, are going to be made as a result of filling imbalances, structure blocks, order blocks, and things of that sort. So as this price was making its way higher, we actually noticed this little area right here. So I had this denoted, I had this drawn out. Again, if we go into here, I'm sure we're going to be able to find it. Yeah, so right here. So this is what we had sent, expecting prices to come up into this area and sell off actually from here. Of course, this could be short term, or it could be a complete reversal, right? We're not always sure. The footprint of what's occurring here is what we call a structure block in mentfx. There is price that came down to grab liquidity on behalf of all these lows here that continued higher, making this order block. So at the time of price, before this down move occurred, this right here was a bullish order block where we would be expecting price to tap into and continue higher. Now, instead, prices broke down through it aggressively and impulsively, leaving behind imbalance right here, and most importantly, right here. Now, this imbalance right here actually enveloped this order block, and that is what we call a structure block in mentfx. And what it basically means is that prices might need to be, or most likely will be, mitigated in or around these areas before continuations higher. And what we mean by that is prices could come to this area and mitigate to come lower to fill more imbalances before continuing higher, could come to mitigate this area and just continue significantly lower, breaking down structural points and then taking off significantly lower, or coming up here to mitigate, create liquidity before then continuing higher. Because if in any of those scenarios, what we're actually doing is we're still creating liquidity that's now going to rest above this high, all these highs here, all the intermediary highs that have been formed along the way, and now potential people that are going to start seeing this as a trend line, expecting more sells off that area, right? So again, our POIs are formulated on a variety of things, and again, it can be almost anything that you use as a POI, but we like to use order blocks and structure blocks. And this right here is what we call structure blocks. So despite the fact that we are bullish on this market, we are now expecting a counter trend trade idea that may come that may not have a crazy retrace before continuations higher, that may have an insane retrace that breaks down the structure and then continues to break down structure on daily and even lower time frames, right? And then starting to break down all the lows here, because guess what? on both sides of the market, liquidity is always built up. The idea is, where's there more liquidity? So in this case, despite the fact that we're building liquidity below this low, 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 we're actually building more liquidity above this high, above these highs, and above these highs. Why? Because more people are trying to catch the tops, right? How many times have you done that as a retail trader, or even as a smart money trader trying to catch the tops? More than you can count, more than I can count for myself as well. Back when I was less, when I understood this market a little bit less. So anyway, we had this POI, which was based on a 4-hour structure block, aka an order block that was created, that was traded through, leaving an imbalance, leaving an area that needed to be mitigated, leaving this inefficiency behind where we could expect sells at. So what did we do? Well, as price began to approach that, we were actually on the 1 minute time frames, I believe. Yes, we were. So we were on a 1 minute time frame and we were watching price, expecting it to come up here. So again, I'm going to leave these on here because I'm not going to remark this up. I'm going to do it with the mentorship, and this is basically for show. But again, we're going to go over the actual trades here. So you'll see that we actually got involved in multiple positions and how we got involved. But let's just take a look at this. So price began to play out. Price came up into this high. And now this is something that I wanted to talk about with a lot of you concerning Wyckoff. So I'm going to make a video on this probably in the future as well. But something people don't realize is any impulse leg that is made can be considered the beginning of a Wyckoff schematic. So this could be the buying climax, right? But what's interesting is when people are watching price, they expect this to be the buying climax, or this to be the buying climax, this to be the buying climax. They don't expect the moves inside to be buying climaxes, right? For instance, if there was some movement in here, there could be a buying climax right there. Okay, this is a very crappy drawing, but what I mean by that is if you have moves that are going through the market like this and you have a crazy up move, right, and maybe a down move, what people forget to realize, okay, here we go, perfect, is that this in itself, right here, is its own distribution. Okay, and what's actually happening is the reason the distribution is happening here is literally to trick the eyes of a lot of people that are trying to expect this to be a buying climax, right? People see this, expect it to be a buying climax, and expect certain things to see, you know, price maybe come AR, ST, and maybe come up and make a new UT and a UTAD without recognizing that the real impulse that was responsible for the buying climax before distribution actually took place, right? So the conversion of buy orders in the market on behalf of retail to sell orders on behalf of on the composite man actually occurred within this area. Again, of course it occurred within these areas as well. However, the main point it occurred in was here. And what happened is we had this impulse that created the buying climax, the automatic rally, the secondary test, the up thrust, the UTAD, the breakdown, right? And then we could be looking to be participants on the structure blocks that form or the order blocks that form, filling in an efficiency, giving you the tests, LPSs before the real continuation downwards, right? So Wyckoff can be hidden from you like this. Wyckoff does not have to occur at the very high or at any consolidation. It can occur within a already established range and then a consolidation, right? So what I mean by that is we actually have that exact thing occur right here, right? So if you take a look at what's actually going on, we have this impulse, and a lot of people are already considering this the buying climax, and they are. And to be perfectly honest with you, at the time of this impulse completing, I myself did believe that it was a buying climax as well, right? But that's okay because we don't get involved until we know that the market has already given us these schematics. So what did we wait for? We continue waiting for price to play out, and what you'll notice happened is we began to distribute within this area, not within this area, right? So not within this area right here, but actually, so this is not the Wyckoff area that we're looking at. We were actually looking at the Wyckoff in here. And we didn't see it until actually, I believe the UTAD already formed and then we had the breakdown. So let's play price out a little bit here, right? So again, what's going on? Remember from our past videos, remember from anything where we spoke about liquidity, intermediary term or very short term, everything is fractal, right? So again, this again doesn't have to be a minute chart. This chart could be an 8-hour chart, right? That was then boiled down to a 1-hour chart, and now we're watching a 1-hour chart. The only difference is we're looking at it happen a little bit faster since we're looking at a minute time frame. That's the same thing as what happens when we look at lower time frames as well. So either way, we have this buying climax, which we follow straight down to our automatic rally, which we follow up to our secondary test, which comes down to make some kind of sign of weakness or maybe more liquidity, right? So it's just building some equal lows, some equal highs on above. And again, right, what's happening? We're starting to form trend lines, and structurally we're starting to move lower. So what are a lot of people starting to do? They're starting to think that they missed the high, right? Because what's happening? They're seeing this as an entire trend line and they want to get involved on these sells to continue lower. They've already seen 3 touches and it's still holding, a 4th touch in there and it's holding, a move down that took out lows, right? So there's a lot of people that want to be involved on this and think that, they're about to miss this move if they don't get involved themselves. But we, on the other hand, understand how to wait. So we wait for Wyckoff to occur in here. And we still only had our UT, which actually just made more liquidity at these areas right here, right? So you can now see all the liquidity that we are starting to print above here and at the bottom, right? So all we're doing is we're starting to create a reason to go lower to take out all the liquidity that we have lying here in the form of what? Stop losses and people that want to sell, right? So either way, what occurs? Well, we have that UT occur, and then we create even more liquidity within that UT. So what are people starting to see? Again, I'm going to do this one more time before we keep talking. The trend line. People want to see that liquidity being broken, but right, so that everyone's trying to get involved in sells again. Same thing's occurring. Okay, fantastic. We have a breakdown, which we see as our sign of weakness, taking out the liquidity here. But again, we have not had our UTAD yet, so I'm not interested in being a participant just yet. And then after that, we have a move again that comes up and stops before the real move up happens. Why do they do this? Well, because intermediary, they're actually getting a lot of people involved in sells in the market when they have this right here. So this is a lot of retail selling, most likely. We can't be sure. Again, we're trading footprints. We're trading the logic and understanding that we have of this market. But more likely than not, this right here is a ton of retail selling before they get taken out, and then the real move actually occurs, right? So we already know it's going to sell off, but the point is this was sent out before. We're going over this for you guys, so you guys can review and you guys can understand how it is that we got involved in the mentorship. So price comes up and finally makes that UTAD, right? And from there on, it breaks down relatively heavily. At this point, we were still not involved in this market. Price came up, failing to go higher than this UTAD, showing us that it actually most likely wanted to go lower. Now, after that occurred, we had the break down below real structural points in the market, expecting this order block, the last one, the last buy before the sell. So again, you can see even this last buy on the 1 minute candle took out the liquidity right here before the real sell occurred, right? So there's this order block right here that took out the liquidity above these highs. So there's some highs here. Oops, here we go. There's some highs there. They got taken out by that one little wick before the down move, right? So that's the last up move before the down move. That's what we had. That's what we had drawn out here. And then we had price break down. And at this point, it created a low, which we now think of as a sign of weakness. So this is a sign of weakness in phase B, right? So what's happening in phase B, if any of you have read any of the Wyckoff material or studied with me, phase B is basically where we convert most people, or we convert a lot of the buy orders on behalf of retail into sell orders for the composite man. We come lower, and at this point, we're already happy to be involved in this sell right here, right? Now, this is where it actually gets a little bit interesting. So as we have that, price actually comes up and taps it actually perfectly. It actually looks like it does come to the 50%. So again, if you wanted to trade the 50% of that order block, so let's just do that real quick. Let's take a look if it did. Okay, so no, it didn't actually hit that. So you would have missed this if you wanted some better RR, but this was what we took. It was a 1 pip stop loss because it was a sell. We took spread into account. So it was GU. So GU spread is usually very small. And I believe this was, it was 7 a.m. So, it was still London, New York session. And basically we just set a stop loss of 1.2 pips, right? Because we took into account the spread, which was about 0.2 or 0.3 pips at the time. So that's how you deal with spread, by the way, for all of you that need to know. Otherwise, if you're buying, you don't need to worry about spread because it's using the actual bid price. So we took the sell and we were aiming to take break even or even partials at this point. To be perfectly honest, I actually collapsed the trade after it got to this point. I was happy with securing a very quick 10 RR. Right, so again, this 10RR literally happened within, if you really want to think about it, about 3 minutes, ultimately, right? So we play this out a little bit quicker to see what it did. Here we go. Yeah, so we actually got down past it. Again, you could have been targeting lower areas, such as order blocks in here, potentially even the order block right here. So again, remember what a wick is on lower time frames, usually an order block. So there's an order block here that you could have been targeting, maybe about halfway. So what you could have done is you could have taken the halfway point of this and targeted that to secure a nice little 16 RR, right? But I was okay with collapsing my trade here because I was happy with the risk to reward on this already, right? You don't have to be trading at higher time frames to get the high RRs. All you have to do is understand why you're getting involved and how you're getting involved, because it's going to be repeated across all time frames. The only difference is you're going to have more opportunities to be part and a participant in the actual move. Okay, so price broke down to there. At that point, you were either broken even, or you were broken even for sure, and you had partialed already, or collapsed your position, or you were just trailing. So again, if you partialed at 1 to 5, and then maybe you're at break even now. And from there on out, actually, you can see price did actually perfectly wicked this area. I didn't actually know it did, so that's really nice to see. And I do think it came back down one more time before continuing higher. So at this point, this was not the end of our day. This was the beginning of our morning, and we were actually looking for more because despite the fact that this gave us a great setup and an order block that we could take lower, I collapsed this position quicker because of the fact that I didn't get a test that I really wanted to from this area here. So what we have here again is another wick that that I don't think has gotten enough tests. So basically I consider this a POI for myself, right? And just like this is a 1 minute chart, so don't get too confused by how low of a time frame we're on right now, right? A 1 minute chart where you're taking a position with 1 pip risk to make 9 pips is the equivalent of a 1 hour trade using the exact same principles, risking 10 pips to make 90 pips, right? Or a 4 hour or a daily chart entry using the same principles again with a 90 pip stop loss and a 900 pip take profit, right? This is the equivalent of that. And when you start to make that realization, you stop caring about timeframes and the amount of pips you take out of the market, and you start to actually recognize that RR is what matters. And we're going to have a video on that in the future as well. So price perfectly plays off of that area. Hopefully it starts playing. There we go. Right, as you can see, it actually does come up. Okay, so this is actually really interesting. So if you had an entry up there, price actually does come up to the 50%, as you can see right here, taps the 50%, still not hitting our stop loss, but at this point we weren't involved. This is not the sell we took. The sell we took was right here. And you had, I believe, lower prices met, right? And there you go, you tapped into this area again. So that was really great. Let's play our price out a little bit more. And now what's happening is, this is basically collapse. This position is over. That's fantastic. But we still have this point of interest here where we're expecting a potential test to occur at. Okay, so this is where it got relatively interesting. So prices came up because I remember this, so I'm just gonna play it out for you guys. So, and we're gonna show you the analysis that we sent out on Discord in a second. So prices came up and tapped into this order block perfectly, right, at about 50% again. Maybe not, maybe it didn't hit the 50, but we can check it out real quick. So actually, I think it hit 50% of it on the dot, which, again, we understand the reason for that, but we didn't sell this, right? It's just that we saw it happen, and now we can be looking to be a participant. So after this market came to take out that low, we ultimately have what we call the mentfx entry. So don't get too confused, or the mentfx block. Don't get too confused by all the lines on here. Most of them are not that important to you. All you need to recognize is that price came to tap this area and fell off. Now our POI was at this area right here, which is the mentfx block. And at this area right here is when we first started looking for Wyckoff to go lower. Okay, so what you'll notice is here's that move up and that move down. This is when we sent it out expecting sells from this area. And now let's just kind of break this down for you guys. We had that move up into it. And we started watching it for potential Wyckoff. We didn't get any. We were waiting for breaks to get involved. However, it never happened. Instead, price continued to push higher. So we're going to look at all this in a second. Again, these are 15-second charts, but do not think about the time frames. The time frames do not matter. We have this UTAD that we thought was a UTAD. Fantastic. So we believe that was the UTAD. However, price continued to play out, and we were actually on a 5-second chart when we finally saw this beautiful distribution occur. And at that point, we were ready to be sellers in this market, looking to sell off of this area right here with our stop loss just above the high. What happened is, so that's the actual trade. We're not going to look at that because it's on the FTMO account, and I shouldn't be disclosing that, so I don't want to be, liable for anything that you guys do. But there was the trade and the management, and then this was the entry. So you'll see that the entry was actually missed. However, we had another mentfx block that we got involved on. And again, we go over this in the mentorship for those that want to learn about it. Feel free to join and check it out. And we got involved right here for sells, looking for prices to come lower and take out some lows. So again, the RR on this wasn't insane. However, if we use the actual order block, it would have been a lot better. That's where I kind of got involved, but this is what we sent out at the time of. Okay, so that's what we sent out. A lot of people caught this trade in our group, and we were looking to BE or partial just under these lows. So again, this RR wasn't insane, but the point is, all the principles of how we got involved were applicable, and we saw them occur in this markup, right? So what actually occurred was, at this point, as price hit our POI near the middle, I was actually on a 30-second chart expecting Wyckoff to occur. So as we were watching this, I believe that this was Wyckoff at first. However, I thought this was all Wyckoff, and it wasn't. And as prices broke higher, I began to get down to lower time frames, and then we saw this occur right here. And as this was occurring, I was interested to see what was actually happening inside here. So I got on a 5-second chart, and then I saw the actual moves that I wanted to notice. We had that buying climax. Again, remember what we just spoke about. A lot of you could be watching this as a distribution, and guess what? This distribution most likely had this as the UT, and this is the UTAD of this major distribution. However, within that distribution, the UTAD of this distribution here was actually its own distribution. So the lower you get, the more fractal your distributions are going to be, and you can spot them a lot better, right? So again, I'm sure a lot of you might be completely surprised and not even believe that we get involved like this on 5 seconds and 15 seconds and very low time frames. But the thing is, it's equivalent to getting involved on any other time frame. It's just about doing it faster, ultimately, right? The candles move the same way. There's no difference between these candles, right? If I wanted to be a retail trader, guess what? Here's my trend line. You know, let me get involved in my buys. Like, everything's still the same thing. It's just moving a little bit faster, right? You have to be more reactive. So we make the sign of weakness, still expecting for this all to get liquidated. So we're not going to get too in depth on this, but there's liquidation here that needs to occur. We're looking for that liquidation before that down move, before we look to be involved, and we see the sell off. So what happens, right? Prices make that sign of weakness, and we have that UTAD form. At that point, we were interested in being sellers here. However, as you guys saw, that sell did not work out. So here's our price come up. It came just to the open of the mentfx block instead of the 50, which really sucks, but it is what it is. And then we saw price break down again. Now, as price broke down here, since this was a 5-second chart, I was kind of sending it back and forth relatively quickly in the group. So here we go, price broke down. Because I was sending it so quickly in the group, it was hard to, refine things. I was just showing people the general area. Here's the sell before it actually occurred, right? So prices came back up here a few times. That's what we were looking at right here. That's the 36182 level, as you can see. So again, I hope this was enough for you guys to understand that this was sent out. Again, it doesn't really matter if none of you believe me. The point is at least take some content out of it, and please, like, just understand that any of you can do this if you put your mind to it. So ultimately, what you could have done is you could have noticed that this is the order block, the last up move before the down move that broke down, right? So ultimately, what you have is this move right here that counts as your order block. So this is actually where your entry would have been. Your stop loss just above the high, just like this. And you'd be targeting lows for break even and partial. So this sell did not work, so we'd be getting rid of that. And now we'd be waiting on this sell right here. So it still has not been tapped. This is what we were looking at as part of this distribution, right? We saw this as the test. This is the last point of supply, and this is what we were expecting to be another last point of supply. Right, so the UTAD, the test, the last point of supply, and then a last point of supply before the drop occurs. So what occurred here, prices came up, tapped it. Actually, you might have been able to sell even the 50% of it. Let's take a look. Let's see if that gets even tapped. I do not think it does. Yeah, so it does not get tapped. So there you go. We got a sell off on that area right there. So that's the last up move before the down move. That's all it is, right? The same principles we've applied to before, just a little bit more space between the candles because it's such a low time frame, right? And then we had that breakdown. Now, after this broke right here, this is actually where I collapsed my position because of how the market was moving. We were just basically getting some scalps out of this market. So this was only a 1 to 2.69. Not going to stand behind any crazy RR that was taken here. I myself partial very early in the market. In this case, I actually did just partial, and I didn't collapse my position, so I only partialed like 1.3 RR if you want to think about it that way. But that's still 1.3% you could have partialed, right? And I believe then, so yeah, prices actually did come up to give you that 50% entry. So again, same thing as the opportunity before. You had a 50% entry that was perfect. And then you had a breakdown again, which gave you perfect partials at the lows, right? Or break even at the lows. And now you could have been participating in this market to see lower prices. So you can see prices actually did drop down quite heavily and gave you an entire 1 to 7 RR off a 5-second chart, right? And this all happened, if you really want to think about it, within about 4 minutes, 5 minutes, right? So that is why I like the lower time frames and like to use them the same way I use the higher time frames. It's just because I get much more entries, and because, like we've spoken about before, since we understand, or we are basically trading off the idea that price will form, and even if it's moving higher, it will move from inefficiency to inefficiency no matter what, right? So that idea is what led us to believe. So even if we're expecting price to take out this high, it could still stop at an order block before the move happens, right? Because it still needs to mitigate under our assumption of smart money trading, or at least the way we view the market. So that's why we were still able to find a sell off of this 4-hour major area. So if we actually zoom out, here's the entire 4-hour area. We were literally scalping the open of that 4-hour structure block. Right, and then after that, price, I do believe, broke away and finally broke back up into higher prices. And at that point, we basically shifted bullish because we were still expecting longer term bullish runs. So we can go out to the 1 minute. Actually, we can just go out to the 1 hour. All these buys do not matter. We did, actually, we'll go to 30 minutes so you guys can see this. There we go. Right, so at this point, after we started taking out highs, we went full bullish and we had all these opportunities present themselves along the way. So these were all things that we sent out. A lot of people caught these on the way up. These were just normal mentfx blocks. We're not going to go over that here because we kind of reserve that for the mentorship, since, you know, we give out a lot here anyway. There's no reason that you guys can't become profitable with all the stuff that's already given on the free YouTube channel. And we were aiming for this high, right, which we perfectly saw price complete at. And again, it wasn't just some random high that we were aiming for. The high was the previous daily high at which we anticipated liquidity to be lying above in the form of stop losses and sell stops. So we came to grab that, and then we continued lower, as you can see. Right, and now price is ultimately, where is it? Oh, so price actually came even higher. So I guess you could have held all of those. And we're still bullish on this for the most part, you know, expecting even higher prices until the bias tells us otherwise. And again, this is all perspective only, so please do not trade it unless you're part of the mentorship and, you know, you're dropping IDs and stuff. Anyway, this video went on a little bit too long. I wanted to look at a trade on Euro US dollar as well, so I'm going to reserve that for the next video. I'm also going to record that and have that posted as well. But this is just going to be a GU setup that we were able to catch. The point of this is to show you that you can be a participant in the market, counter trade, counter trend, even if the trend is going in a certain direction, right? You can still be a part of that market and it doesn't have to be considered wrong, right? You're trading as long as it is set in stone and you have a consistent way to get in and you have a consistent strategy to refine your entries and get involved in them, and you understand that your edge is ultimately the fact that you're trading a specific way, then you are all capable of doing that on repeat, whether it's with the trend or against it. Because if you know what you're looking for, then you know how to find it and you know how to get involved. And again, we got involved in this as a mentorship. Some people got involved on it as well, despite the fact that it was 5 seconds. People executed the same way as they saw prices hit the areas that we were looking at, broke even. I think some people broke even, other people took profits. It was fantastic. And then we caught the moves up as a team. So it wasn't just me sending them out. The buys you saw there was multiple people sending those out. However, they were all under the mentfx block strategy. Okay, so thank you so much, guys, for watching. Join the mentorship if you want to be a part of this type of community. Otherwise, I hope you guys enjoy the videos. Please leave a like if you enjoyed it. Leave a dislike if you didn't, but just let me know why. Thank you so much for watching, and I will see you guys in the next video. See you guys.